So good morning and good afternoon, good evening to everyone. I would like to welcome you to today's session, a webinar on the FATF revision on recommendation one. So it's a great pleasure to welcome all of you to today's webinar. And our webinar today, we have called it Fostering Financial Inclusion in Small Island Developing States, One Caribbean Voice with Financial Inclusion with Financial Action Task Force on Recommendation 1. I would like to extend a special and heartfelt welcome to all our esteemed participants and to the global audience joining us online. It is truly a privilege to have such a distinguished group of you with us today. I also want to take this moment to particularly acknowledge the presence of key stakeholders, which includes financial regulators in the region, representatives from the central bank, EU delegates, the TTIFC team, which is joining us online, my distinguished colleagues from the UNCDF and other UN agencies here present. Your engagement is instrumental to the success of this important conversation today. Just to give you a background of our webinar today, perhaps this is not a new conversation at all. We are coming from a series of webinars, and since the second quarter of this year, the UNCDF Caribbean Office has had the privilege to be engaging with all of you, most of you from various avenues of financial inclusion. If you recall very well, in June 2024, this year, we hosted a session here at TTIFC again with the same set of global experts gathered to discuss implications of Financial Action Task Force Recommendation 16, which is called the travel rule. The revisions under this discussion at that time aimed at looking at anti-money laundering and counterterrorism finance measures. However, it was clear that extending data requirements to cash-based transactions would pose significant challenges for financial inclusion, particularly for low-income populations in developing and emerging economies. And that included the Caribbean small island states. The webinar today seeks to further this discussion and amplify one Caribbean voice in the ongoing conversation around the FATF revisions on Recommendation 1. The recommendation focuses on strengthening the implementation of the risk-based approach and ensuring the proportional application of AML and CFT protocols in our unique regional contexts. We are further fortunate today to be joined by a distinguished panelist of global experts in the financial sector who will help us to unpack the implications of these revisions and to advocate for changes necessary to safeguard both financial security and inclusion in the region. It is my pleasure, therefore, to introduce to you today, first of all, Karina Johnson, the project manager from the East Caribbean Bank, Mohamed Case, the AML specialist, as well as the consultant for UNCDF. In absentia, Ivo, who is also a senior specialist in the financial sector. A great honor to have Professor Louis, who is also a consultant for the World Bank, but also an influencer in the Financial Action Task Force. I'm also excited to introduce to you one of the UNCDF consultants on financial inclusion and policy harmonization, Ms. Annie Barbrand, who is based in Barbados. But before we hear from Mohamed and Professor Louis, who will take us through the keynote presentation, I would like to invite the EU delegate, Kyla Walland, to provide remarks on behalf of the EU delegation in the East Caribbean region. I want to thank you once again for your participation and I look forward to the fruitful and enlightening discussion. Thank you.
Okay. Good morning. Can everyone hear me? Hello?
Yes.
Yes.
Okay, great. Thank you. Okay. Good morning, all. Thank you very much for inviting me this morning to represent the European Union, for who we are the primary sponsors for this activity this morning and this webinar. And so I will start by saying good morning to our distinguished panelists, participants, and colleagues. It is a pleasure to join you today on behalf of the European Union. I would like to commend the UNCDF for organizing this timely webinar on Financial Action Task Force. Commend the UNCDF for organizing this meeting and the proposed revisions to its recommendations of the FATF. These revisions are pivotal for fostering financial inclusions, particularly in small island development states, where access to financial services remains a significant challenge. The EU is proud to support initiatives like this as they align with our commitment to sustainable development, financial resilience, and inclusive growth in the Caribbean and beyond. These FATF revisions are quite important. They underscore the discussion today that mark and reflect on the FATF's efforts to balance financial security with accessibility. These have far-reaching implications for enabling underserved communities, to access the formal financial system. By encouraging a proportional application of AML CFT protocols, we can help reduce overcompliance, which has historically excluded vulnerable populations from accessing banking and digital payment services. These have far-reaching implications for SIDS in the Caribbean region. For the Caribbean, where cash transactions dominate, MSMEs often lack access to business accounts or digital payment systems. These revisions are particularly relevant in these regards. Simplified customer due diligence measures can directly address the barriers that prevent MSMEs from participating in domestic and international markets. The EU's role and commitment to this type of development is unprecedented and unwavering. At the EU, we see tremendous potential in aligning these revisions with regional priorities. Digitalization and inclusive policies can transform economic opportunities for the Caribbean nations, allowing businesses to integrate into the global economy more efficiently. Today, I'd like to call upon all participants in your discussions is another opportunity to shape the future for financial inclusion. I encourage all participants to contribute actively and insights in for your consultation process to strengthen the FATF recommendations in the region. The EU remains committed to the support initiatives driving meaningful change and build inclusive resilience in economies, particularly within the CARICOM and CARIFORUM regions. In closing, I extend my gratitude to the UNCDF for hosting this critical dialogue, to all panelists for their expertise and perspectives in monitoring and initiating these recommendations. Further, I'd like to add this is just one of a few other initiatives which the EU has a major contributing factor, because through the CFATF Secretariat, Caribbean Financial Action Task Force Secretariat, who are the regional regulators of the FATF recommendations in the Caribbean, which we also have other initiatives where these two programs, this one that this webinar is part of, is going to be working synergetically to help the region further push forward the agenda in relation to financial inclusion, sustainable financial development. I thank you this month and I wish you a very good and successful seminar. Thank you.
Thank you very much. At this point, I think I will take over, Edward, if that is okay, but there's an echo. Can you hear it? Somebody next to the...
Yes, we can.
We can hear you and the echo.
So let's wait a little minute. Okay,
It's
is
better.
it better now?
Better, I
Yeah.
guess.
Okay.
Yes.
So I'll start. Well, thank you very much. My name is Annie Bertrand. I'm the financial inclusion expert at the UNCDF, and I'm super excited to have on stage today 4 amazing speakers who really work hard to fight against financial exclusion. And first, we have 3 subject matter experts who will help us understand the Financial Action Task Force proposed revisions on its famous recommendation 1. Which may be actually at the root of our problem in the Caribbean that prevents MSMEs to join and benefit from the digital economy. So the UNCF actually released a working paper that describes the issues and opportunities related to this problem. And really at the heart of it lies KYC, Know Your Customer authentication. So we're lucky to also have with us today Karina Johnson. As mentioned, Karina actually managed the implementation of a CBDC pilot with the Eastern Caribbean Central Bank. So she has first-hand experience implementing simplified customer due diligence under the risk-based approach to facilitate onboarding of individuals in the Eastern Caribbean. So we are very excited to have you all. Thank you to be here. We will start with Mehmet Kurs. Mehmet is a senior fintech expert with over 15 years of experience in simulating digital financial inclusion without increasing systemic risk to financial systems. So how does he do that? Well, he helps to build the capacity of regulators, help them to develop licensing and supervision framework that are effective but also inclusive. And I have the pleasure of working with Mehmet myself in our policy accelerator at the UNCDF. So I can tell you that he's kind, patient, and full of knowledge. So I'm sure you're going to enjoy listening to him. And we also have Luis de Coker. Luis is a senior financial crime policy expert. In addition to teaching at law and university, he also influences many organizations and people, including the Financial Action Task Force, via publications, books, and advice. So it's really an honor to have you gentlemen here. We also have Ivo. Ivo is a singer. For those who have seen his post, he's a great singer, but also he's a senior financial specialist who leads CGAP's work on regulatory architecture for digital financial inclusion. So we had the opportunity of also having Ivo last year in our workshop where we had about 100 regulators from across the region. He delivered a session on regulatory sandbox. So Ivo is going to join us later. So at this point of time, I would like to invite Mehmet and Louis to please take on the stage. Thank you.
Thanks. Hi, everyone. Thanks, Edward, Kyle, and Annie. Good morning.
Thanks.
Good morning, good afternoon, good evening, depending on where you are right now. And
No, it's okay. It doesn't have to be on. Yeah, so the thing is, I see. But
can you mute your mic, please, if you're not speaking, because we can hear people. Thank you.
That's fine. Thank you. It's great to be here to be part of this session, and thanks to the UNCDF Caribbean team for organizing this timed session, as Kyle highlighted. And as you know, FATF has 40 recommendations to combat money laundering, financing of terrorism, and proliferation of financing. And now recommendation 1 is being revised and now in the public consultation process. So, and as Kylie mentioned, recommendation 1 is one of the most important recommendations for the financial inclusion, as it's basically on the risk assessment and risk-based approach. And it's very important, I can say, for countries, central banks, financial authorities, supervisors who want to advance, promote financial inclusion in their countries. Before diving into the discussion, let me start briefly what CGAP is been doing and CGAP's involvement in the AML CFT and integrity agenda. So CGAP is a think tank housed at the World Bank Group, and it first started in 1995, and back then, our focus was primarily on microcredit. Then the focus had expanded to the microfinance. And now, since then, CGAP has been looking at the most relevant issues to financial inclusion, for example, such as climate, women's financial inclusion, digital financial services, financial consumer protection, and many others. And CGAP looks at all these issues from a financial inclusion perspective. And also, I need to mention that CGAP is a global partnership of more than 35 leading development organizations. And these organizations include UNDP, United Nations Development Program, UNCDF, Inter-American Development Bank, Bill Melinda Gates Foundation, and many others. So basically, our focus is to advance financial inclusion of the low-income, vulnerable, and financially excluded and financially underserved people. So when it comes to the CGAP's activities on AML CFT, so we are looking at the AML CFT issues because these issues have important impact on financial inclusion, and these issues have impact on low-income populations, financially underserved and financially excluded people. And CGAP has been involved in the financial integrity agenda more than 20 years. So we have been supporting the FATF's work more than 2 decades from a financial inclusion perspective. And luckily, today we have Louis here, who has been with CGAP throughout the years, throughout this journey. A couple of things, initiatives I want to mention is back then in 2011, FATF drafted financial inclusion guidance, and CGAP was part of the project committee. So 1211 guidance informed the approaches to simplify the due diligence when the standards, the revised 2012 standards were adopted. And CGAP also supported the revision of financial inclusion guidance in 2013, then again in 2017. And CGAP also contributed to the financial inclusion guidance of the FATF with examples of good regulatory practices to the guidance and etc. And similarly, CGAP supported different work of FATF, including the drafting of FATF's digital identity guidance. And also CGAP supported the FATF's important work stream on unintended consequences of FATF standards, etc. And also recently we provided feedback and we supported the drafting financial inclusion training prepared by FATF for the assessors for the mutual evaluation assessors, etc. Right now, CGAP is also part of the project team working on the revisions to recommendation 1, and also this project team working on the revisions on financial inclusion guidance of FATF. So we will come to that, but financial inclusion guidance of FATF is now also being revised. So next slide, please, Edward. So let me hand it over to Louis for the
Thank you so
actual
much.
revisions.
Thank you so much. Very briefly, I'm very conscious of the time constraints. But what we'd like to touch on is the risk-based approach, just to provide the context for the amendments. Four broad aspects of the amendments that we'll cluster and then open up for discussion, and then we have some ideas at the end that Ivo will speak to. And next slide, Edward, please. Right, so FATF's risk-based approach was introduced in 2012. Before that, FATF standards lay down specific rules determining what countries had to do and what institutions had to do. The risk-based approach basically said, undertake a risk assessment and then be led by risk to determine how you respond to each standard. But essentially, the focus of the risk-based approach has developed into one that focused on higher risk. And interestingly enough, the risk-based approach was introduced to support efficiency. And the idea was resources are scarce in terms of compliance. And we want to ensure that the resources are used where they're most required so that they move from where risks are lower to where risks are higher. Unfortunately, that approach, which is set out in recommendation 1, was lost in the other recommendations that all focused on effectiveness. And as institutions and countries rush to double down on effectiveness, the compliance spend has got out of hand. It's now estimated to amount to more than $200 billion per year. Furthermore, in terms of the discussion that we're now currently having, there is a belief that simplified due diligence will solve all of the financial inclusion problems. And we just want to position at the outset that simplified due diligence is a very big part of the solution. But many excluded people live in higher risk contexts in fragile countries where it's not possible to easily classify them as lower risk. And therefore, we also want to position the need for other solutions, but the ones that are currently positioned by the FATF. Next slide, please, Edward. So the objective of these revisions is to strengthen the application of proportionality. But it's important to note that the scope of the revisions are very limited. We are at the start of the so-called 5th round of mutual evaluations within the FATF community, and countries are evaluated on the latest standards as they stand. So any significant changes now will immediately put pressure on the countries that will be evaluated first to ensure that these systems are aligned with the new standards. And therefore, there is tension. We've been pushing for more, but the system and the tensions within the system are kind of designed around these revisions to be very limited. We've requested, for example, relaxation of some of the elements around liability, because it's all very well to tell institutions you may simplify where you feel risks are lower in terms of your own risk assessment, but if they still held liable for anything that goes wrong, then they're more reluctant to simplify their control measures. They rather want to double down on controls. So unless there's some adjustment or sensitivity around liability, this may not deliver all of the benefits that we hope for. And furthermore, you may be allowed to simplify where risks are lower, but there are no incentives to do so. And frankly, the institutions carry the liability for financial inclusion, which is in the public interest. and those tensions are not being addressed either. Next slide, please, Edward. So, in essence, if we look at the structure of the risk-based approach, essentially, FATF's language from the start has been to ensure that countries employ enhanced due diligence where risks are higher. But the language around simplified due diligence and lower risk was far more uncertain. It simply allowed countries to consider to allow simplified due diligence. And that is what FATF wants to change as part of these revisions. Next slide, please. Now, to take you to the text of the revisions itself, and I want to lift out ensure highlighted in yellow in the first paragraph. Where countries identify higher risks, they should ensure that the AML-CTF regime adequately addresses such risks that interprets as they should ensure enhanced due diligence. But where they identify lower risk, just look at the text that was deleted, they may decide to allow simplified due diligence. Well, frankly, we have many countries who decided not to allow that. And they were allowed by the standards to exercise that option. The language is now proposed to be tightened to allow and encourage. Now, that is very helpful, but it's interesting to compare that with the immediate following text in relation to proliferation and financing, where in relation to higher risks, we again find ensure, but then in relation to identify lower risks, we also find ensure, which is stronger language than allow and encourage. So when you consider the language and you make a submission to FATF, perhaps to support these amendments, that is perhaps something that you could point out, that there's a discrepancy there that needs to be addressed. Next slide, please. There are a number of changes made to language, exchanging commensurate for proportionate. In essence, to make it clearer in the language that proportionality is at the focus of the risk-based approach. Now, this is a mere change in language, but we do think this is beneficial as a signaling mechanism. Next slide, please. What they also do is to propose a definition, saying that a proportionate or commensurate measure is one that appropriately corresponds to the level of identified risk and effectively mitigates the risk. Now, that is helpful. Whether that will have a good effect in practice will depend on whether the emphasis is placed on the proportionate aspect or on the fact that the measure has to be effective. And that will depend on the approach of the supervisor. Now, the next slide just shows one of the examples where proportionate replaces commensurate, but it also points out to important language in the interpretive note, specifically paragraph 2, that will require of countries in the future to identify areas of lower risk. In the past, we've seen national risk assessments only pointing to higher risks. This will need to change. And not only that, countries will be required to provide guidance or information on the implementation of simplified due diligence measures. And that looks very helpful. Next slide. Thank you. Now, with that, I want to hand to you, Mehmet, on overcompliance. Thank you.
Thanks a lot, Louis. So yes, let me continue with another proposed revision on the recommendation 1. And as you know, FATF allows simplification and exemptions when it comes to the due diligence and etc. So this is great. But as you know, in many developing countries, the regulatory authorities are concerned with simplification initiatives when there's a lower risk. And also they are concerned about implementing exemptions when there is a low risk. So simplification for low risk, exemption for low risk. Because they are worried that the implementation of simplifications or exemptions might have some sort of repercussions on the country itself. When I say this, for example, benefiting from this kind of simplifications or exemptions may lead the country to end up FATF's gray list. This is a concern. And in many cases, this concern leads the supervisors to be overly stricter when assessing and evaluating financial service providers, assessing how these providers implement risk-based approach. But the proposed language to recommendation 1 comes up with a new revision. And basically, it requires supervisors to review and take into account the risk mitigation measures undertaken by the providers, by financial institutions. This is important. And it's explicit that the supervisors on the ground should also should monitor the risk mitigation measures of the financial service providers, in addition to the risk assessments undertaken. So basically, this is to encourage the supervisors on the ground to look at whether providers actually applied proper simplified due diligence of simplified measures when there is an assessed lower risk. So next slide, please, Edward. So this is the actual text. Yes, this is the proposed revision in the actual task in italic and in actually highlighted in yellow. As you see, FATF is proposing to add and the part in red and risk mitigation measures undertaken by financial institutions and DNFBPs. But of course, at the end of the day, I think I need to mention that the impact of these revisions will depend on how these supervisors interpret these requirements. So basically, the impact of the revision, so the revisions is great, but the impact of the revisions will depend on the supervisor's judgment on whether these measures, when I say these measures, the simplified measures actually appropriately mitigate the identified lower risk. So next slide, please, Edward. So FATF recommendation 1 allow countries to apply exemptions in some cases, and they allow countries to exempt certain types of financial institutions from some sort of due diligence requirements, for example. But this is possible right now. This is possible with where there's a proven low risk of money laundering, terrorist financing, proliferation financing risk. So proven low risk. And the current language says that this should be applied in strictly limited circumstances. So yes, the current text is this should be the case if there is a proven low risk. However, the language of proven, the word of proven is problematic because in many countries, proven risk is considered as like a much stricter, much higher bar, which requires more than an appropriate risk assessment. So many jurisdictions actually were not willing to benefit from this exemption thing, and they avoided to apply the exemption when there is a low risk. And now FATF is proposing to change this language. So first of all, FATF is proposing to delete the word of strictly. In addition to that, it's also planning to replace proven low risk with assessed low risk. So this could be a small change with significant impact. And this proposal will give a clear message to the countries that they can use their national risk assessment process to specify, to determine low risk situations. And the proposal will clarify that countries can reduce or decrease the compliance burden on the low risk institutions, low risk financial institutions, as long as they are determined by the national risk assessments. And next slide, please. So yes, here are the proposed revisions. And as you see, the word of the strictly is planning to be dropped. And proven low risk is replaced with the assessed risk. Next slide, please. So another revision, proposed revision by FATF is about the remote relationships, remote engagements. So basically, for a long time, since 2003, FATF classified non-face-to-face business relationships, remote relationships, digital relationships, as potentially high risk. But today, as you know, I mean, digital customer verification can be quite reliable, and it can be reliable as in-person relationships. Non-face-to-face can be reliable as face-to-face relationships. And this is actually because of the developments in digital ID and electronic KYC systems in many countries. And now with the proposed revisions, FATF wants to reassess the riskiness of remote transactions and remote relationships. So basically, as you see, the proposed revision is now proposing that non-face-to-face transactions, remote transactions, should only be considered as potentially higher risk situation if appropriate risk mitigation measures are not in place. By the way, this is great, and this proposed language is close to the language that was used in FATF's digital ID guidance, which was published back in 2020. And digital ID guidance even highlights that remote customer identification and remote verification can even be considered as lower risk if it relies on the secure, safe digital ID systems. Next slide, please. Yes, so here is the proposed revision in the actual text, and the proposed revision is in red. And yes, FATF is proposing to add unless appropriate risk mitigation measures have been implemented. Next slide, please. So these were some of the proposed revision in the recommendation 1, but FATF has other work right now actually conducted in collaboration with the countries and with international organizations. And FATF has several work that is relevant to financial inclusion community. So yes, as mentioned here during this presentation, recommendation 1, the revisions to recommendation 1 and proposed revisions to interpretive note to recommendation 1 and recommendation 10 is ongoing. And the deadline to submit comments is December 6th, next week. But right now, FATF is also working on revising its financial inclusion guidance. As I mentioned, the guidance was first published in 2011, then it was revised in 2013, and the guidance support the countries and the providers, financial institutions in designing AML CFT measures for the to meet the financial inclusion policy. And in 2017, the guidance, the FATF issued a supplement to this guidance, which focuses on customer due diligence, which focuses on simplified measures, examples, etc. And now FATF is in the middle of the work on revising this financial inclusion guidance. And also, I want to mention that the CGAP is part of the project team that is working on these revisions to guidance. So our Ivo Yannick and Louis are part of the project team, and most likely the public consultation for the draft revisions will happen around March 2025, March-April 2025. And also, as Edward and Kylie mentioned, FATF is also revising its recommendation 16 on payment transparency, and there was a public consultation on that, and it has been closed, but FATF is now reviewing the feedback and keep engaging with different stakeholders on recommendation 16, and very soon FATF will finalize the process on recommendation 16. Also, very quickly, I know I don't have that much time left, but FATF also recently revised its national risk assessment guidance. This is important, and the final version is now at the FATF's website. And also, finally, FATF organizes annually private sector collaborative forum where there's an information exchange happening. So basically, FATF and private sector representatives maintain discussions on certain things on the FATF agenda during these forum, private sector collaborative forum. And last year, again, it was around March, April. Anyway, I mean, in 2025, March, next year, there will be another private sector collaborative forum that will be held in Mumbai in India, and the details of the agenda is not clear yet. So let me stop here, hand it over to you, Annie.
Yes, thank you so much, Mehmet. I'm excited to see how we can contribute to all this work. And also have many questions, well, few questions to make it more, to make it real for us in the Caribbean. But before I do so, I would like to invite Karina, because Karina, I would like, I mean, she managed to implement this CBDC pilot, this project that really brought the Caribbean on the world stage, because this pilot actually got us some global awards. And so we want to hear from her her perspective on how to implement the simplified customer due diligence to foster financial inclusion using CBDC wallet. So Karina, please, the floor is yours.
Hi, thanks, Annie. And I'm cognizant of the time. Can you see my screen?
Yeah.
Great. So thank you again. And so my role this morning, I just wanted to highlight briefly how current regulatory and policy initiatives of the ECCB aligns with the recommended revisions to Recommendation 1. For us here at the ECCB, our understanding of financial inclusion means that we are working to make financial services and products not just only more available to persons in the ECCU, but more affordable. In fact, we have just yesterday announced a call to our financial institutions in the ECCU to make available to individuals as well as MSMEs basic bank accounts with effect from 1st December. These basic bank accounts come with a number of risk mitigation measures, but they are designed to ensure that there is a more accessible channel for persons to open and operate transactional bank accounts. And so on the screen, you will see that these accounts are meant to be free to open, no charges for transactions, particularly deposits and withdrawals. These accounts will also accrue interest and are not subject to minimum balance, which have traditionally been one of the major barriers to persons in the ECCU being able to maintain bank accounts. In fact, to date, we have 2 of our licensed financial institutions in the ECCU already implementing basic bank accounts and offering it to their customers. In keeping with the current recommendations, the ECCB has issued due diligence guidelines as to how these simplified due diligence measures are to be put into effect, specifically for the basic bank accounts. We see here that banks are encouraged to accept at least one piece of valid identification document to open and hold these bank accounts. Moving on to the second part of my presentation, the application of simplified customer due diligence in relation to our Dcash pilot wallets. Again, this aligns with the revised approach to remote engagements. During our Dcash pilot from 2021 to 2023 to 2024, and specific to that financial inclusion objective, we included a specific wallet, value-based wallets, which for the purposes of reaching persons who had no pre-existing relationships with our licensed financial institutions, also allowed for simplified customer due diligence in the form of one piece of identification document, as well as a facial photograph. We found, in fact, at completion of the Dcash pilot, that this particular wallet type had a 2-to-1 rate of openings compared to our register-based wallets, which required persons to have pre-existing relationships with a licensed financial institutions. Together with these simplified due diligence requirements, we also implemented risk mitigation measures as required by recommendation 1, including transaction limits. However, we took a graduated approach to risk assessment in that we would have allowed for a higher tier of transaction limits where persons were able to submit additional KYC information. I think, as mentioned earlier, the strength of simplified customer due diligence for remote engagements, including CBDC wallets, can actually be located in a fully realized digital ID solution. We are still some way from that in the ECCU, but there are a number of initiatives currently looking into implementing that. So this is one of the ways that we see the simplified customer due diligence for digital finance working to help promote financial inclusion. So I pause here, Annie, and turn back to you.
Yeah, thank you so much, Karina. This is so exciting. It's great progress that we have seen done in the Eastern Caribbean Currency Union, thanks to your leadership and great work. But I have a few questions, and in the meantime, I'm gonna ask these questions. I'm gonna ask other stakeholders to write in the chat their questions, and we will open up to others to provide to share some questions after that. So my first question I want to ask is about the risk-based approach implies that we're defining risk scenarios, right? We need to define risk scenarios for money laundering and terrorist financing so that we can adapt the customer due diligence accordingly. But I want you to explain to us, help us understand how are these risk scenarios defined really? More precisely, I want to know from you is the value of transaction a good indicator of low risk scenario? Because really, this is about preventing crimes that undermine integrity of financial systems and preventing illegal activities. But if we're doing small value, if our MSMEs in the region and individuals are transacting small in small value, can this be an indicator of low risk scenario automatically? So I'd like to hear your opinion on that. Whoever wants to.
So
Mehmet or
sorry.
Yeah. Go ahead.
So okay, let me start, and then maybe Louis can add. Apologies, Louis. So yes, you're right. I mean, in determining low risk circumstances and cases and determining the exemptions, certain types of indicators might be useful for the countries. And for example, the volume of transaction, the total annual turnover, I don't know, small businesses, their potential income, the frequency of transactions, many other things. And as we discussed in the current situation, FATF allow countries not to apply some of the recommendations for financial institutions where there is a proven low risk of money laundering and financing terrorism. And it relates to a particular type of activity or institution. That's possible. But this needs to be informed by by the national risk assessment and also maybe a risk assessment done by the countries, authorities, etc. So for example, a financial activity that is conducted on an occasional basis or that is conducted on a very limited basis under a quantitative or absolute criteria can be considered as low risk, again, depending on the risk assessment of the country. For example, this is just an example, by the way. For example, some types of farmers can be considered as low risk as for example, their transactions can be very occasional because at the end of the day, it depends on the time of harvest. And in this assessment, the volume of potential transaction of farmers can be used as an input, for example, while designing the due diligence requirements for these low-risk farmers. And how to calculate the threshold will be specified by the countries relying on their national risk assessment. So again, just an example. So I'm not saying that farmers are like low risk in advance. So it depends on the national risk assessment, but this is actually possible under the recommendations.
So it's possible under the recommendations, but is the new guidance on national risk assessment clear on that? Because the thing is that, we have to understand the context of the Caribbean when we have small islands with limited capacity at the country level to conduct complex national assessment that would enable the identification or the proper risk assessment to identify the lower risk scenarios. So are those guidelines that you mentioned, those indicators that would stimulate financial inclusion, do you know if they are included in the new guidance? Because would like to know like more specifically which of the indicators proposed would be more relevant to foster financial inclusion.
So I have answered, but Louis, please go ahead. So because I already interrupted him once.
Thank you, Mehmet. That's a very good question, Annie. Putting on my academic hat, no, it's not clear. FATF is not clear because the new guidance is confined to money laundering. FATF has separate guidance on national risk assessments for terror financing and separate guidance on national risk assessments for proliferation financing, and the three documents don't speak to one another. And the new document raises a number of questions, and it's premature because the document will need to be revised the moment that the new revisions are adopted. So it's a tad confusing, and it would be very important for FATF to be much clearer in their guidance around risk and risk assessment. And for many years, we pointed out that FATF has a risk-based approach, but it has not defined risk. And there are a number of definitions around, also ISO definitions that are used by institutions, but they are not the one that FATF embraces, and FATF itself internally finds it difficult to agree on a definition. There's even disagreement as to whether national risk assessment should focus on inherent risk or residual risk. And that uncertainty remains after the new document.
Well,
So,
very good.
Thank you.
Yeah, no, because when you say that, like, they did not define the risks, I mean, the risk of financial inclusion in itself, is it not a risk as important as money laundering and terrorist financing? Like, why can the FATF not consider the risk of financial exclusion a part of the importance of the integrity of the global financial system? Why is FATF not ensuring that the countries are actually mitigating this risk and ensuring that financial institutions have measures to address the risk of financial inclusion? Isn't it something that should be in there?
So if I can clarify, if I say FATF doesn't define risk, the concept of risk is not defined by FATF. It uses risk assessment concepts, but it makes it clear the assessment is judgment-based. It's subjective. To make the exercise of applying your mind reasonable and reasoned, you need a methodology. You need a clear methodology. But we're operating in a space with very little data. And as a result, you end up basically with people sitting in a room deciding what they think the risk is. And in that process, coming back to financial exclusion risk, FATF accepted in 2011 that financial exclusion poses a risk to FATF's integrity objectives. But that recognition has become more muted over the years, and we hope that it's going to be clearer in the next version of the guidance that is published. So it's good to keep up the pressure, because FATF is not supporting financial inclusion only for the development benefits. It has to support it in order to protect the financial integrity of the system and reach its overall high-level objective of ensuring financial integrity in the economy. Thank you.
Yes, very good, very good. And I think, Mehmet, you mentioned that a closer supervision. I have two more questions, and then we'll open up because I know I can see the time going fast. But Mehmet, I wanted to touch on this. You mentioned in your presentation that a closer supervisory review of risk mitigation measures may reduce over-compliance. And I mean, I would like you to explain how and why, because in the Caribbean in particular, we've been in touch with regulators who have been monitoring and investigating the risk-based approach of financial institutions, and they have determined that the financial institutions do have a clearly defined risk-based approach with simplified customer due diligence. So the problem is that they don't have a risk-based approach. The problem is that they're not implementing it, and they don't bother to assess really the risks and implement the simplified approach. So they basically most, if not most, of our financial institutions in the Caribbean are just using enhanced customer due diligence, which means that many people are excluded. So how do you think we can use that new revision to foster and financial inclusion?
Thanks a lot, Annie. This is a great question, and it's not an easy one. So I know that because I used to be a bank supervisor too, and I also conducted AML-CFT supervision back then. And even the AML-CFT regulations do have the flexibility in applying the rules and provisions. Financial service providers might have a tendency to apply the stricter rules. But in many cases, this is due to the fear of supervisors, by the way. I mean, so financial providers at the financial institutions might be worried about the on-site and off-site supervisors come and will impose some penalties, or financial institutions can be worried about, okay, the supervisor will come and will criticize us not to follow the full rules. So, again, it's important that supervisors consider the flexibility in the regulations. And again, the recommendation, the revised recommendation is important because it's explicitly requires supervisors to review, I am trying to remember the exact wording, but to review and to consider the risk mitigation measures taken by the financial service providers. So now this is a requirement for supervisors, and it's clear that supervisors should go and monitor and supervise these risk mitigation measures.
Yeah, this is great, but I'm a bit concerned of unintended consequences of this revision, because we know that implementing properly the risk-based approach is very expensive for financial institutions, because they have to document and define the profile of each customers and make sure that if they are considering that a particular customer is lower risk, how do they maintain that profile over time? So it's expensive for financial institutions to do, and in the Caribbean, especially, we are at risk of de-risking, in a sense that we have banks that have left the region because they did not find that the region was profitable enough. So I'm actually have some concerns about this, and perhaps we can take it on and bring them to the Financial Action Task Force. And I have one last question, and then I'll open up. And related to the non-face-to-face authentication. So my question is, clearly there's a difference in the strength of the use of technology when you do non-face-to-face, right? So for example, biometrics authentication with AI algorithm is probably stronger than using say, for example, an ID that is not digitalized. And so my question is, should the supervisors start to be more knowledgeable about the risk implications of the use of different technologies? For face-to-face. Anyone? Any comments? I mean, Karina, in the Dcash wallet, did you start using biometrics authentication? Yes, I think you mentioned.
In the early phases, no. We utilize traditional identification, but digitized. As the pilot progressed, however, as you rightly point out, we recognize the need to use enhanced technology to ensure the authenticity of documents. So while we have started planning for Dcash 2.0, this is one of the areas that we are looking to implement. The use of biometrics in customer authentication, as well as overall improving the electronic KYC process.
And that is very powerful, especially perhaps in the context of the Caribbean. But tell me if I'm wrong, but does that mean if we're using biometrics, that means we don't have to validate an ID to a national database, and that could open up the opportunity of having our visitors coming to the region, uploading to a wallet using biometrics, and then they could use their wallet in the region where they're visiting the country. So that could open up new markets even for SMEs in the region, if I am correct. So at this point, I would like to invite, we have, I mean, hopefully we still have, because we're over time, we still have the Caribbean Financial Action Task Force, who has been speaking on our behalf also at the international level. And I think it would be great if we can hear from them or from any other regulators still online to hear comments and questions from their perspective. So do we still have them online? Ah, yes, we have Roger Hernandez there. So go ahead, if you can unmute your mic and speak. Mr. Hernandez. Can you unmute? Mr. Hernandez, Yawning or Edward, is it possible for you to unmute Mr. Hernandez?
Yes, he has the floor. He can speak.
Okay, okay. Mr. Hernandez, we want to hear your comments or questions. We cannot hear you.
Oh, there was also a hand from Shanaz.
Oh,
And Ivo.
Yes. Should I go ahead?
yes, go ahead.
Yes, please
Shanaz.
go ahead, Shanaz.
Okay, Shanaz Mohammed, Manager Cashless Economy and Financial Inclusion with the TTIFC. And this is for Karina. Karina, first of all, congratulations on that basic bank account provisioning. I'm hearing an echo.
Hello, can you hear me?
Yes.
Hello?
Yes, yes, we can hear Mr. Hernandez. Shanaz was speaking, asking a question. If you can wait just 1 second, she finishes perhaps,
Okay.
and then we'll hear from you. But I'm glad that we can hear you. So go ahead,
Okay.
Shanaz.
Yes, so my question is how or what strategy or what did you do to help the financial institutions implement these basic bank accounts? Is there any incentive that you all offer, and is it that you all monitoring the uptake of these bank accounts as well? Because I find it very, I shouldn't say difficult, but challenging for financial institutions sometimes to offer these low-tiered bank accounts because probably it's not very profitable for them. So that's my question.
Very good. Thank you, Shanaz.
Thanks, Shanaz. Just briefly, the basic bank accounts that we now provide for was actually the outcome of a working group which represented a collaboration between the EC Bankers Association and the ECCB. So this is what I think it was of strategic importance when the regulated entities themselves are a part of defining this process. And in fact, the implementation actually precedes the actual legislative amendments to codify this change. So insofar as the incentives required here, I think part of what we have been able to do and do it with a degree of success is to have the buy-in and the active participation in drafting this change from the Bankers Association here in the EC.
Yes, this is great commitment from them. Now we would like Mr. Hernandez to take the floor. We want to hear from
Okay, you can hear me now?
Yes, yes, perfect. Thank you.
Okay, all right, okay. With regard to the FATF position, we are a member of the group, the project itself that is looking in recommendation 1 and the financial inclusion guidance paper also. And as Louis pointed out, right now at this point in time, there is a public consultation with regards to the revisions that have been made to recommendation 1 and to the interpretive note to recommendation 1 and Rec 10 and Rec 15 also. As noted, this is available via the FATF web page. What we as the Secretariat try to do, we try to encourage our members to contribute towards the whole process, towards the revisions of the recommendations. And this is something that we have been doing since day one, and we take part in all discussions with regard to the revisions to all the recommendations. As a matter of fact, the CFATF sent out an email on the 1st of November advising its member countries through their prime contacts about the public consultation. And there was a link to the FATF page with regards to those various documents. So you can go onto the direct page itself and insert your comments with regards to the various revisions. As noted by Louis, Louis had highlighted the various provisions and changes in the recommendations itself. So at this point in time, private stakeholders and also competent authorities can go there and insert their comments with regards to that. So now that is to deal with recommendation 1 itself. Also, as part of our plenary is coming up next week, and our delegates would also be given an overview of the decisions that were made at the FATF plenary in October with regards to this particular project also, and will be advised of the fact that the consultation goes on until December the 6th, right? Following that, following that consultation, just to give some highlights of further processes, we will be meeting, the project will be meeting to refine the standards revision, and then we'll be circulating a final proposal for those revisions from the 20th of December to the 10th of January. This will go out to all delegates, and what will probably get also is that our members would also have a chance to also make any comments that they want on the final proposals. And then this will go forward for a meeting on the 21st of January, where we'll look at all the incoming comments and make our final draft. And then this will go forward for adoption of the standards revision in the February plenary of the FATF. Following that, we will then be working on the updated guidance with regards to financial inclusion going forward. And as mentioned by Louis, also there's a public consultation, as mentioned later on, there's a public consultation in March, right, where we'll be starting looking at comments coming in with regards to the guidance itself. So what the CFATF Secretariat is hoping and is incentivizing and is trying to keep its members advised of these possible avenues for them to put forward their positions with regards to the revisions that are being proposed. And we would encourage our members through the prime contacts and also through the public consultation, the private stakeholders, to take this chance to go to see the document and to make their recommendations with regards to any revisions that are being made at this point in time. As it is, that is the situation at present. And if there are any, any questions from anybody with regards to any clarification of the process, I'll be happy to answer them at this point in time. Yeah. Thank you.
Thank you so much, Mr. Hernandez. This is great because, as you may know, well, the UNCDF is actually supporting several central banks in the Caribbean and ministers of finance to develop financial inclusion strategies. So it would be great that we can share those outcomes of those financial inclusion strategies with your entity, so that we can make sure that we integrate some consideration related to this. So at this point of time, in the interest of time, I will ask Ivo. Ivo, I can see you are online, to conclude the session today with the final next step, so that we can thank you properly. Ivo?
Thank you very much, Annie. This has been a great session. I regret to join later, but I had an actually related conversation that conflicted with the webinar. I cannot really say it better than Mr. Hernandez already did. Our appeal here is to look at the proposed revisions and submit comments, because the more comments FATF Secretariat receives, the stronger the voice of the financial inclusion community, the Caribbean community, etc. will be. So supporting the revisions that are useful, but also perhaps highlighting where the revisions fall short of expectations, especially given the limited scope and possible uncertainty that it creates in certain areas. I think it's important to vocalize or write those comments and submit them to FATF Secretariat for recommendation 1. The public consultation ends on December 6th, which is next week. The last point I like to make relates to the discussion about the incentives and also the point about the technology and innovation. I used to work a lot on regulatory sandboxes, and you know very well regulatory sandbox concept. I think we should all kind of hope for a bit more regulatory sandbox-like approach to the risk-based implementation and to the use of innovation in compliance with AML, CFT, CPF standards. Regulatory sandbox at the national level, but maybe also regulatory sandbox at the FATF secretariat level could create a space where more experimentation can happen, provide incentives for experimentation with new ideas, without necessarily immediately facing negative consequences. So I think that's one idea that perhaps is worthwhile exploring in more detail. We're actually putting a blog post later today that speaks to that as well. So with all of that, I just again encourage you to submit your comments in the public consultation, and over to you, Annie.
Well, thank you so much, Ivo. And I thank you so much, everyone who stayed online. We kept you 15 minutes extra, but I think this Q&A session was interesting. And I really thank our speakers. I thank the EU for making this project possible, and as well as the Caribbean Financial Action Task Force for joining us today. So thank you very much, and stay tuned. You can join our LinkedIn profile. We will post the recording for those interested. Thank you very much.
Thank you.
Bye.
Bye-bye.
Bye.
Thank you.
Thank you. Take care. Bye.
Thank you.
Thank you. Bye.